Hello and welcome to this weekly market update. In just 2 minutes, we will show you all the charts, news and economic updates you need to support your trading in the week ahead. Let's begin with analysis of the latest price action.
The euro did break 1.153 support as we suspected last week and then 1.152. The breakdown means there is a new downtrend in place. The British pound has dropped under the September lows and the 1.34 round number to open up fresh multi-month lows and another leg of the longer-term downtrend. The dollar-yen has bounced off the 61.8% Fibonacci retracement of the last big leg higher and is challenging resistance near 114 as part of what could be a long-term bull flag pattern. The dollar Swissy broke resistance at 0.917 as well as the 20-day moving average into what looks like a new uptrend. Possible upside resistance lays at 0.926 and 0.93. Gold made a decisive move higher after a breakout from its recent trading range capped at 1835. 1850 then the previous resistance at 1835 a possible support. Brent crude oil is trapped in a range between $80 and $85 in a wide consolidation after big gains in October, so range trading strategies instead of trend trading remain appropriate. The S&P 500 has pulled back from 4,700 in what remains a strong uptrend. 4600 then 4,540 are next levels of possible support. Should the pullback go deeper?
Thank you. And now for the top market moving news headlines of the last week.
Highest US inflation in 30 years. US consumer prices rose by 6.2% in October, the highest since 1990. EUR/USD drops to a 16-month low. The US dollar hit fresh 2021 highs and EUR/USD tumbled to a 16-month low after the CPI data. Bitcoin meets $70,000, ICE Ether $5,000. Cryptocurrencies are back hitting record highs after a months-long slump thanks in part to inflation concerns. Gold hits a 5-month peak. Investors who are seeking a hedge against inflation have turned to gold, which broke out to its highest since June. VIX rallies towards 20. The fear gauge has been rising and lies just south of the big 20 level that typically divides calm from fear. Musk sells Tesla stock after Twitter poll. Elon Musk sold $5 billion worth of Tesla shares after asking his 63 million Twitter followers whether he should sell 10% of his stake. GE splits in 3. General Electric, one of the original Dow stalwarts, has split into 3 separate companies in a major breakup of the conglomerate. House passes Public Works Bill. The House of Representatives passed a $1 trillion public works bill. The $2 trillion education, healthcare and climate package is still being negotiated. Rivian has the biggest IPO this year. Electric vehicle maker and Tesla rival Rivian had the biggest IPO this year, valuing the company as high as $100 billion. Robinhood shares drop after data breach. A data breach saw shares of broker Robinhood hit a fresh post-IPO low.
Thank you very much for that. Finally, let's turn to the top data releases in this week's economic calendar.
Comparable economic data from Japan and the Eurozone are released this week, third quarter GDP and October CPI. Europe is growing faster and prices are rising faster than in Japan. However, rising global inflation might mean Japan is set for some catch-up, implying yen strength. The assumption that the BOJ will be on the sidelines longer than the ECB could get tested. Besides its importance for the state of the American economy, U.S. retail sales will be interesting in the context of inflation at the highest in 3 decades. If consumers are paying higher prices, naturally they will have to buy less. A soft number here could lead to lower revisions to Q4 earnings expectations. The Bank of England expects UK inflation to rise as much as 5% in the next few months. Yet the MPC decided to kick the can down the road and leave rates on hold in November. That decision could come back to haunt them if CPI jumps this week, or they will be vindicated if it doesn't.
That's it for now. Make sure to subscribe to our channel for all the latest updates and have a great week trading.